Ladies and gentlemen, I need you to stop everything you're doing right now. I need you to close the other tabs. I need you to put your phone on silent. I need you to pay attention to what I'm about to tell you, because what happened this week is not a normal market event. This is not a routine price move. This is not just another rally that you can ignore and catch up on later. What happened this week is a historic inflection point. It is a moment that will be studied in financial textbooks for the next 100 years. And if you're not positioned correctly, if you do not understand what just occurred, you are going to be left behind while the greatest wealth transfer in modern history plays out right in front of your eyes. Silver just broke above $80 per ounce for the first time in human history. Let that statement sink into your bones. $80. Not 30, not 50, not even 75. $80 per ounce. The number that the mainstream financial media told you was impossible. The number that the bank analysts said would never happen in our lifetimes. The number that your friends and family laughed at when you mentioned your silver thesis. That number is now reality. It is printed on the charts. It is confirmed by the exchanges. It is official. But here's where the story gets truly extraordinary. Here's where we separate the people who understand what is happening from the people who are just watching from the sidelines. This was not a gradual climb. This was not a slow grind higher over months and years. This was an explosion. Silver delivered a 3.7% gain in a single week, and it did this during one of the lowest liquidity periods of the entire year. It did this when the trading desks were half empty. It did this when the algorithms were supposed to be on standby. It did this when nobody was supposed to be paying attention. Do you understand what that tells us about the underlying dynamics of this market? It tells us that this move is not being driven by speculation. It is not being driven by retail traders pushing buttons on their phones. It is being driven by conviction. Deep, institutional, unshakable conviction that the price of silver is going significantly higher. The people who are buying right now are not buying to flip for a quick profit next week. They are buying because they know something. They have seen the supply numbers. They have seen the demand projections. They have done the math. And the math says that $80 is not the ceiling, $80 is the floor. But before we dive into where the price is going next, we need to examine the evidence that this rally is the real deal. We need to look at the confirmation signals that are flashing across the global financial system right now. Because while silver was breaking records in New York and London, something extraordinary was happening in China. Something that the Western financial media is barely covering. Something that confirms everything we have been saying about the supply squeeze. China's only pure-play silver investment fund just collapsed by 10% in a single trading session. 10%. The maximum daily loss allowed by the exchange. The fund hit the circuit breakers. Trading was halted. Investors were locked in their positions watching their screens turn red. And this was not some small, obscure fund that nobody cares about. This is the UBS SDIC Silver Futures Fund. This is the primary vehicle that Chinese retail investors use to gain exposure to silver. This is the fund that had been on an absolute tear, delivering gains that made everything else in the market look like a savings account. Now I know what you are thinking. You are thinking that a fund collapse sounds like bad news for silver. You're thinking that maybe the rally is over. You're thinking that maybe you should take profits and wait for a pullback. And I understand that instinct. I understand the fear. But I need you to think deeper. I need you to look at what this collapse actually represents. This fund did not collapse because silver is going down. This fund collapsed because silver went up too fast. Let me repeat that, because it is crucial. The fund collapsed because the gains were too extreme. The manager of the fund issued a rare public warning. They used the word unsustainable. They said that the rally had become disconnected from reality. They implemented emergency restrictions on new subscriptions. They cut the maximum investment from 500 yuan down to 100 yuan. They are literally turning away new money because they cannot handle the demand. This is not a bearish signal. This is the most bullish signal imaginable. When the professionals start panicking about how fast an asset is rising, when they start implementing emergency measures to slow down the buying, when they start warning their own clients that the gains are too good, that is not the end of the rally. That is the middle of the rally. That is the moment when the smart money knows that the real move is just beginning. Think about what happened to the premium on this Chinese fund. At the start of the month, the fund was trading at a 7% premium to its underlying assets. That means investors were paying 7% more for fund shares than the silver they represented was actually worth. That is already elevated. That already shows strong demand. But by Wednesday, that premium had exploded to 62%. 62%. Investors were so desperate to get exposure to silver that they were paying 62% more than the metal was worth just to own a piece of a fund. This is not rational investing. This is panic buying. This is fear of missing out on a generational scale. This is an entire nation of investors looking at their screens and realizing that they need to own silver right now at any price before it goes even higher. And when you see that kind of behavior in the second largest economy in the world, you know that the trend is not going to reverse on a dime. You know that the momentum has become self-reinforcing. You know that every dip will be bought and every rally will be chased. But the Chinese fund story is just one piece of the puzzle. To truly understand what is happening, we need to look at the performance numbers for the year. Because when you zoom out and look at the big picture, the scale of this move becomes almost incomprehensible. Silver has gained nearly 220% this year. 220%. That is not a typo. That is not an exaggeration. That is the actual verified on-the-record performance of silver in the current calendar year. Do you have any idea how rare that is? Do you have any idea when the last time silver delivered gains of this magnitude was? You have to go back to 1979. You have to go back 45 years. You have to go back to the Hunt brothers. You have to go back to a completely different era of finance, before computers dominated trading, before algorithms existed, before the modern derivatives market was created. That was the last time silver moved like this. And what happened after 1979? The price went parabolic. It touched $50, which adjusted for inflation would be well over $150 today. It created millionaires overnight. It bankrupted the shorts. It changed the course of financial history. We are living through that moment again, right now, this week. The conditions that existed in 1979, the supply squeeze, the industrial demand, the monetary chaos, the loss of faith in fiat currency, all of those conditions exist today. But they exist on a larger scale. They exist in a more interconnected global economy. They exist with technology accelerating every trend. If silver could go to $50 in 1979 with 1970s demand, what can it do in 2026 with electric vehicles, solar panels, artificial intelligence data centers, and 5G infrastructure all competing for the same shrinking supply? The answer is that it can go to numbers that will make your head spin. The answer is that $80 is not the destination. $80 is the departure point, but we cannot just rely on historical comparisons. We need to look at the current fundamentals. We need to examine why this rally is happening right now. And when you dig into the supply and demand dynamics, when you look at the actual physical market, when you look at what is happening in the real world, you discover that this rally is not just justified. It is inevitable. Physical premiums for silver have reached extreme levels. Let me explain what that means for those who are new to this. The spot price you see quoted on financial websites is the price of paper silver. It is the price of contracts that represent silver. It is not the price of actual metal that you can hold in your hand. The physical premium is the additional amount you have to pay to get real silver delivered to you. And right now, that premium has exploded. Why? Because there is not enough metal to go around. The industrial users are desperate. The solar panel manufacturers need silver for their photovoltaic cells. The electric vehicle producers need silver for their batteries and electrical systems. The artificial intelligence data centers need silver for their servers and conductors. The electronics companies need silver for their smartphones and computers. Everyone needs silver. And there is not enough to satisfy them all. Inventories are at their lowest point ever. Let that sink in. We are not talking about inventories being low by recent standards. We are not talking about inventories being low compared to last year. We are talking about the lowest inventory levels in the recorded history of the silver market. The vaults are being drained, the warehouses are emptying. The exchange inventory that is supposed to back all those paper contracts is disappearing ounce by ounce. And this brings us to the terrifying reality that the industrial users are waking up to. There is a very real risk of supply shortages that could impact multiple industries. We are not talking about higher prices. We are talking about physical unavailability. We are talking about factories shutting down because they cannot source the silver they need. We are talking about production lines halting. We are talking about economic disruption on a scale that most people cannot even imagine. This is why the smart money is accumulating aggressively. This is why the funds are seeing unprecedented inflows. This is why the premiums are exploding. The people who understand the physical market know that the paper price is a fiction. They know that the real price, the price you have to pay to actually get metal, is significantly higher. And they know that eventually the paper price will have to catch up to reality. When it does, the gains for holders of physical silver will be extraordinary. But there is another factor driving this rally that we need to discuss, a factor that has geopolitical implications, a factor that involves the two largest economies in the world. I am talking about the Chinese export restrictions. I am talking about the moves that Beijing is making to secure their domestic supply of critical metals. I am talking about the development that prompted one of the most famous entrepreneurs in the world to issue a public warning. When the news broke about China's export restrictions on silver and other critical metals, the market reaction was immediate. Prices surged, volume exploded. The momentum that had been building suddenly accelerated into overdrive. But it was the response from one particular individual that captured the attention of the world. A certain electric vehicle manufacturer, a certain space exploration company founder, a certain social media platform owner looked at the news about Chinese export restrictions and posted 3 simple words. This is not good. 3 words. No explanation, no elaboration. Just a stark acknowledgement that something significant had changed in the global supply chain for critical metals. Now think about who this person is. Think about the industries he operates in. Electric vehicles require massive amounts of silver for their electrical systems, their batteries, their charging infrastructure. Space technology requires silver for its conductivity, its thermal properties, its reliability in extreme conditions. Artificial intelligence requires silver for the servers, the data centers, the chips that power the algorithms. This is a person who understands supply chains better than almost anyone on the planet. This is a person who has access to information that the average investor does not. When this person says something is not good, you need to pay attention. The Chinese export restrictions are not a minor bureaucratic adjustment. They are a strategic move in a global competition for resources. China has recognized that silver and other critical metals are essential for the technologies of the future. They have recognized that controlling these resources gives them leverage over their competitors, and they have decided to prioritize their domestic industries over exports to the West. This means that the supply of silver flowing from China to the rest of the world is about to decrease dramatically. This means that Western manufacturers, Western technology companies, Western industrial users are going to have to find alternative sources. And those alternative sources do not exist in sufficient quantity. The mines cannot ramp up production fast enough. The recycling infrastructure cannot fill the gap. The only solution is higher prices. Prices high enough to destroy demand, prices high enough to force industrial users to find substitutes or go out of business. We are watching the beginning of a resource war. We are watching the major powers compete for control of the periodic table. And silver, which most investors still think of as a monetary metal, has become a strategic commodity. It has become a weapon. It has become the battleground where the future of technology will be decided. But the fundamentals are only part of the story. We also need to examine the technical picture. We need to look at what the charts are telling us about where the price is going next. Because when you combine powerful fundamentals with bullish technical signals, you get the conditions for explosive moves. And that is exactly what we are seeing right now. On the 4-hour chart, silver has completed a textbook breakout from a rising triangle pattern. For those who are not familiar with technical analysis, a rising triangle is one of the most bullish patterns that can form. It shows that buyers are becoming more aggressive, pushing the price up against a resistance level, while sellers are becoming exhausted. When the price finally breaks above that resistance, the accumulated buying pressure is released all at once. The result is usually a powerful directional move. The upper boundary of this triangle was around $76.35. That level has now been decisively broken. More importantly, that former resistance has become support. Price tested the level after the breakout and held. Buyers stepped in immediately to defend the new floor. This is exactly what you want to see in a healthy trend continuation. This is the market telling you that the breakout is real, that the buyers are in control, that higher prices are coming. The structure of the rally is particularly encouraging. We are not seeing narrow-range indecision candles that suggest uncertainty. We are seeing large bullish candlesticks that confirm directional momentum. We are seeing a sequence of higher highs and higher lows that defines an uptrend. We are seeing price respect a rising trend line that has guided the advance since the middle of the month. Every piece of evidence points in the same direction. Higher. The key levels are now clearly defined. Support sits at $76.35, followed by a secondary support zone around $73.70. Resistance stands at $81.30, then $82.75. As long as price holds above the support zone, the path of least resistance is up. And given the fundamental backdrop we have discussed, there is every reason to believe that resistance will be taken out. The momentum indicators are confirming the strength of this move. The relative strength index, the RSI, is hovering near 88. Now I know that some of you will look at that number and say that the market is overbought. I know that some of you will think that a pullback is inevitable, and under normal circumstances, you might be right. An RSI of 88 is extreme. It suggests that the market has moved too far too fast. It often precedes a correction. But here's what you need to understand about momentum in trending markets. Overbought can stay overbought for a very long time. In powerful uptrends, the RSI can remain elevated for weeks or even months. The fact that there is no bearish divergence at this stage, the fact that price and momentum are moving in sync, suggests that the trend is still intact. We are not seeing signs of exhaustion. We are not seeing panic buying or vertical moves that suggest a blow-off top. We are seeing strong, steady, relentless buying pressure. The structure of the market favors shallow pullbacks that attract new buyers, rather than deep corrections that shake out weak hands. This is what you see in the early stages of a major trend. This is what you see when conviction is high and supply is scarce. Every dip is bought, every pause is a consolidation before the next leg higher. The bears try to push the price down and they get steamrolled. They try to break support and they fail. Eventually, they give up and start covering their shorts, which only adds more fuel to the rally. So where's the price going next? Based on the technical structure and the fundamental backdrop, the near-term target is $81.30. That is the first significant resistance level on the chart. A break above that level would open the door to $82.75. And beyond that, we are looking at uncharted territory. We are looking at prices that silver has never seen before. We are looking at triple digits. Yes, I said triple digits. $100 per ounce. That is not a fantasy. That is not wishful thinking. That is the logical conclusion of the trends we have been discussing. When you have the lowest inventories ever, when you have the highest industrial demand ever, when you have major exporters restricting supply, when you have central banks around the world cutting rates and printing money, when you have investors fleeing paper assets for physical metals, when you have all of these forces aligned at the same time, there's only one direction the price can go, and that direction is up. Let me walk you through the math, because numbers do not lie. The Federal Reserve has cut rates 3 times in a row. Lower rates reduce the opportunity cost of holding precious metals. Gold and silver do not pay interest. So when rates are high, investors face a penalty for holding metals instead of bonds. When rates are low or falling, that penalty disappears. Suddenly, the safety and stability of precious metals becomes more attractive. Suddenly, the inflation protection becomes more valuable. Suddenly, the lack of yield is not a weakness, but a strength. Central banks around the world are buying gold at the fastest pace in decades. They are diversifying away from the dollar. They are preparing for a world where fiat currencies are less reliable. They see the debt levels in the United States, in Europe, in Japan. They see the deficits. They see the money printing. And they are protecting themselves by accumulating hard assets. If central banks are buying gold, how long before they start buying silver too? How long before they recognize that silver is undervalued relative to gold? How long before they start competing with industrial users for the scarce supply? The exchange-traded funds are seeing massive inflows. Billions of dollars are pouring into precious metals ETFs. Investors who cannot or will not hold physical metal are buying paper claims on metal. And every share of those ETFs is supposed to be backed by physical silver sitting in a vault somewhere. But here's the problem. If the ETFs keep seeing inflows and the mine supply stays flat and the industrial demand keeps growing, eventually there will not be enough physical metal to back all those paper claims. Eventually, something has to give. Either the inflows stop or the price explodes to a level where demand is destroyed. Given the fear and uncertainty in the global economy, I do not think the inflows are going to stop. The geopolitical backdrop is adding fuel to the fire. We mentioned the Chinese export restrictions, but there is more. The United States has been taking aggressive action around the world. Sanctions, blockades, financial warfare, these actions have consequences. They make other countries nervous about holding dollars. They make other countries want to diversify into assets that cannot be frozen or confiscated. They make precious metals more attractive as a store of value. Every time the United States weaponizes the financial system, it drives more demand for gold and silver. The situation in Venezuela, the situation in Nigeria, the tensions in the Middle East, the uncertainty in Europe, all of these hotspots are contributing to safe haven demand. When the world feels dangerous, people want to own things they can hold. They want insurance against chaos. They want protection against the unknown. Gold and silver have served that function for thousands of years. They will continue to serve that function for thousands more. So we have fundamental demand from industry. We have investment demand from funds and central banks. We have safe haven demand from geopolitical tensions. We have monetary demand from currency devaluation fears. Every category of demand is elevated. And supply cannot respond. The mines are maxed out. The recyclers are maxed out. The existing inventory is being drained. Something has to give. What gives is the price. The price is the pressure relief valve. When supply cannot match demand, the price rises until it finds a new equilibrium. And given the magnitude of the imbalances we are seeing, that new equilibrium is going to be much higher than $80. It is going to be higher than $90. It is going to be higher than $100. The only question is how fast we get there. Now let me address the concern that some of you might have. You might be looking at the chart and seeing that silver has already run a long way. You might be thinking that you missed the move. You might be thinking that it is too late to buy. And I understand that feeling. I understand the regret of not buying at $30 or $40 or $50. But I need you to understand something critical. In major bull markets, there is no too late until the trend is over. And this trend is not over. It is just getting started. Yes, silver has gone up a lot. Yes, the easy money has been made. But the big money is still ahead. The move from $80 to $160 is the same percentage gain as the move from $40 to $80. The opportunity is not behind you, it is in front of you. Think about the people who bought gold at $1,000 and thought they were late. Gold went to $2,000. Think about the people who bought at $2,000 and thought they were late. Gold is now well above that level. Think about all the assets that have doubled and then doubled again. The people who said it was too late at the first double missed the second double. Do not make that mistake with silver. The technical analysis supports this view. A sustained hold above the $76 to $77 zone keeps the bullish scenario intact. A period of consolidation would be healthy after the sharp run we have seen, but it is not required. Sometimes markets just keep going. Sometimes the momentum is too strong to pause. Given the fundamental backdrop, I would not be surprised to see silver push straight through to 81 and then 82 without looking back. If you are looking for an entry point, the optimal strategy is to buy pullbacks toward the $76.50 to $77 zone. That is where the support is. That is where the buyers will step in. That is where the risk reward is most favorable. Set a target at 81.30 initially, with the potential for extension toward 82.75 and beyond. Use a stop below 73.70 to manage risk, but understand that the trend is your friend as long as we hold above the key levels. The week ahead is going to be volatile. We are coming out of a holiday period. Liquidity is still thin. The traders are returning to their desks. The data releases will resume. There are plenty of catalysts that could move the market in either direction on a short-term basis. Do not get shaken out by noise. Do not let a red day or a red week make you doubt the thesis. The fundamentals have not changed. The supply is still tight. The demand is still strong. The trend is still up. What we are witnessing is not a bubble. I know that word has been thrown around. I know that the mainstream media loves to call any rally in precious metals a bubble. They did it in 2011. They are doing it again now, but they are wrong. A bubble is when prices disconnect from fundamentals. A bubble is when speculation drives prices to levels that cannot be justified by any reasonable analysis. That is not what is happening here. What is happening here is a repricing. Silver was undervalued for years. It was suppressed by paper markets. It was ignored by investors. It was taken for granted by industrial users. And now, finally, the true value is being recognized. The price is catching up to reality. The gap between the paper price and the physical price is closing. This is not a bubble. This is a reckoning. The only bubble I see is in the paper assets. The only bubble I see is in the stocks trading at 50 times earnings. The only bubble I see is in the bonds paying negative real yields. The only bubble I see is in the currencies being printed into oblivion. Those are the bubbles. Silver is the needle. And when the bubbles pop, where do you think that money is going to flow? Where do you think investors are going to hide? They are going to run to safety. They are going to run to things that cannot be printed. They are going to run to gold and silver. And when they do, the demand that we are seeing now will look like a trickle compared to the flood that is coming. I want you to think about your portfolio right now. I want you to think about your exposure to precious metals. I want you to think about what percentage of your wealth is protected by real assets that you can hold in your hand. If that percentage is low, if it is single digits, if it is zero, you are taking an enormous risk. You are betting that the financial system will continue to function smoothly. You are betting that the currencies will hold their value. You are betting that the paper promises will be honored. History tells us that is a bad bet. History tells us that every fiat currency eventually fails. History tells us that paper promises are only as good as the institutions that back them. History tells us that in times of crisis, the only thing you can truly count on is the physical asset in your possession. Silver at $80 per ounce is not expensive when you consider what it protects you from. It is not expensive when you consider the purchasing power you are preserving. It is not expensive when you consider the insurance it provides against a system that is showing more and more cracks every day. The markets are telling us something. The 220% gain this year is telling us something. The collapsing inventories are telling us something. The exploding premiums are telling us something. The panic in the Chinese fund market is telling us something. The warnings from the tech billionaires are telling us something. The question is whether you are listening. The train is leaving the station. It has been leaving for a while now, but it is not too late to get on board. The destination is triple-digit silver. The destination is a complete repricing of precious metals relative to paper assets. The destination is a world where the people who held physical metal are wealthy, the people who trusted the paper are devastated. You have a choice to make. You can sit on the sidelines and watch. You can tell yourself that it is too late, that the move is over, that a pullback is coming. You can find reasons to do nothing, or you can take action. You can position yourself for what is coming. You can join the people who understood what was happening before it was obvious to everyone. The evidence is overwhelming. The fundamentals are undeniable. The technicals are confirming. The momentum is accelerating. Silver is going higher. much higher. The only question is whether you will be part of the move or whether you will be watching from the outside, wondering what could have been. The time for hesitation is over. The time for action is now. $80 is not the end. It is the beginning. The next leg is about to start. And when we look back at this moment a year from now, 2 years from now, 5 years from now, we will recognize it as the moment when everything changed. We will recognize it as the moment when silver broke free from decades of suppression and finally reached its true value. We will recognize it as one of the greatest wealth-building opportunities of our generation. Do not miss it. Do not let fear hold you back. Do not let the noise distract you from the signal. The signal is clear. Silver is going to triple digits. Get positioned now while you still can. Hold your metal tight. Ignore the volatility. Trust the process. And watch as the greatest repricing event in modern history unfolds before your eyes. This is the moment we have been waiting for. This is the breakout we have been predicting. This is the validation of everything we have been saying. And it is only the beginning. The best is yet to come. Stay focused, stay patient, stay invested. And whatever you do, do not let go of your silver. The world is about to discover what we have known all along. And when they do, the price is going to levels that will shock everyone who was not paying attention. $80 today, $100 soon. And beyond that, the sky is the limit. Welcome to the new era of silver. Welcome to the repricing. Welcome to the moment when holding physical metal becomes the smartest financial decision you have ever made. The future belongs to those who own the metal. Make sure you're one of them.